Welcome back, everybody. 44 minutes after. Ronald McDonald probably not smiling today. The world's largest restaurant company reported a 7% drop in second quarter revenue. That because of slowing consumer spending and a stronger U.S. dollar. Earnings were on track with analyst estimates of 97 cents a share. That compares to 94 cents a year ago. McDonald's earnings started really coming under some pressure in the last quarter of last year, and the stock has dropped more than 10% so far this year. Shares today, they're taking a hit. Investors taking a bite out of that share price, down about 5% at $55.92 a share. But Thomas Forte, he's an analyst with the Telsey Advisory Group. He says he's still optimistic about that stock, but is disappointed by the drop-off in sales. He joins us now with his reaction. Tom, good afternoon.
Good afternoon. Thanks for having me on.
All right, so you know we've got an up market today, a rally, in fact, yet shares of McDonald's, they're taking a big hit here, down about 4% or so. The earnings details, were they really that disappointing?
Well, the earnings itself were pretty positive. The challenge for McDonald's was they are seeing a slowdown in sales. You especially saw it in the month of June. Consumers are really opting to dine at home more often, and I think this is affecting even at McDonald's.
Well, I'm a little confused here because, go back a few months and everybody said, yep, those higher-end restaurants, they're definitely going to hurt in this economy. People can't afford to go out and eat, but something like a McDonald's was benefiting. What happened?
Well, McDonald's is benefiting, but at the same time, when you think about, one, the prolonged nature of the recession, we've been in a recession since December 2007, and two, the elevated rate of unemployment. We're now at 9.5% unemployment. And while McDonald's is maybe counter-cyclical, they're not immune to the recession, and the recession is starting to even negatively affect their sales.
All right, so we know revenue fell more than expected. Are there costs, though, that need to kind of come out of the McDonald's equation, or do they need to adjust its strategy, or is it just fair enough to just blame the economy and that consumers are in a tough spot?
Well, the cost picture is actually improving for McDonald's to the extent that the decline in global sales is also contributing to a pullback in commodities, so their food cost picture is actually getting better, and that's really been beneficial to all restaurants. So I think for McDonald's, they need to keep coming up with good products. I think the Angus is a good product, maybe not the perfect time right now given the recession, but their efforts at McCafe, I think, are huge over an extended period of time. The good news for McDonald's is they're gaining market share, and they still have positive traffic to their restaurants, and you can't say that for a lot of other operators.
No, that's fair. And I mean, they've really adjusted and been adapting their strategy over the last few years, so it sounds like you like all the moves that they've been taking.
I do like McDonald's moves. I think they've made a position to put themselves to be relevant to consumers, even in the tough times. They have a wonderful dollar menu. They also have more indulgent core items and then premium products. So I really think they've done a good job. And then they also, they have a lot of strength in their advertising, and they've done a good job of promoting both the core items like the Big Mac as well as the dollar menu, and it's helped their performance to hold up very well in the tough times.
All right, Tom, but they did have that drop in sales, and it wasn't just here in North America. I mean, it was global.
Correct. And I do think for that was a little concerning that you saw a pullback. They see it in Asia, in both Japan and in China, and in Europe with Germany. Now, they did on a relative basis perform very well in Germany, but when you think about last year versus this year, there definitely was a couple hundred basis points weaker comp in that part of the globe.
All right, and the currency impact, we mentioned that certainly is having an impact, and that could potentially continue to have an impact.
Well, it is having an impact, but the story is getting better there. So they had a 9-cent drag in the quarter from currency, and now they're projecting 4-cent drag in the next quarter, but actually a 2-cent benefit in the fourth quarter. So the picture on currency has actually gotten better for McDonald's. They really do well when the euro is strong,
right.
And for them, the euro is starting to gain some strength back against the dollar.
All right, Tom, I do want to talk a little bit more about the stock. It's down about 5% right now. I looked at the stock. It has rallied from those March lows. It's up about 11%, but it's a big underperformance compared with the S&P, which, as you know, is up more than 40% since early March. Why are the shares of that company, McDonald's, why are they underperforming so much?
So when you think about McDonald's shares, you have to think about what they represent. They were a safe haven last year. They outperformed. I think Walmart and McDonald's were the only Dow components to be up last year. And now as investors have become a lot more optimistic and are searching for higher beta names, they're trading out of McDonald's and to some extent Walmart as well, and seeking higher beta names for more attractive returns. So I do think the shares of McDonald's are still attractive, but if you're a believer thinking that we're hitting 10,000 in the Dow anytime soon,
right,
then they may underperform on a relative basis.
All right, they might underperform then, as you mentioned. What about any kind of near or longer term catalyst, anything that you're kind of keeping your eyes on?
Well, I do think McCafe is a huge win for McDonald's over the longer term, as well as the Angus, to the extent that they will both be ticket drivers and to the extent that they are higher margin items. So the challenge for McDonald's, as with other operators in restaurants right now, is it sure would be nice if the recession were coming to a close and that consumers were a lot more confident in spending money.
All right, got to run, Tom. Take care now.
Thank you.
Tom Forte over at Telsey Advisors.